Time for the market report. Farm costs going up according to the USDA.
No big surprise considering all the fluctuations we've seen. We'll get into it, but first, the numbers. What were last week's biggest gains and losses? And then the 2023 farm expenditures report. What did it tell us? And finally, in our row report, beans had the biggest price drop in one day so far this year. What happened? So, markets closed recently, trending slightly up, row crops getting the better of it while livestock split. Let's take a look. Last week's biggest gain, wheat, up 21.25 cents. That's more than a 4% increase from the previous week. Last week's biggest loss, lean hogs, down nearly 13.5 cents, down more than 14.5% from the previous week. Last week, the USDA released its 2023 Farm Expenditures Report, a detailed look into what exactly the ag sector's costs look like on a national level. In short, expenses are up all around compared to 2022 for both row crops and livestock farms. Here are the details. U.S. farm production expenditures in 2023 estimated about $482 billion, up $29 billion from 2022, a near 6% increase. The four largest expenses in the U.S. for 2023 total about $239 billion, nearly 50% of total costs. These include feed at about 17%, livestock, poultry, and related expenses at about 12%, farm services at about 11%, and labor at about 10%. Crop farm costs increased about 8%, livestock about 5%. The largest expenditures for row crop farms are labor, farm services, fertilizer, lime, soil conditioners, and rent. For livestock farms, feed, livestock, poultry, and related expenses, and farm services. In this week's row report, crop prices rising slightly. However, the biggest news was soybeans, and although they technically rose, initially they were much higher, only to dramatically fall over 30 cents in one day. I spoke with Extension row crop economist Will Maples to find out why.
Row crops have been continuously going down all year. Soybeans hit particularly bad this past week. Why?
Yeah, so the soybean market gave us a little bit of a glimmer of hope last week. We actually saw it up through the first half of the week, but then Friday happened, and it was down nearly 32 cents on the day. That's the worst day the November soybean contracts had this year. And really, it was all weather driven. So first of the last week, we got some weather reports that looked like some extreme heat was going to come into the Corn Belt, into the Midwest region. August is the biggest time for soybeans to be made. So that weather report started driving prices up as it looked like we might have some challenges. But then Thursday into Friday morning, the weather reports changed. A lot of that extreme heat moved further west out of the region. And then that threat was gone, so soybean prices started plummeting again. We saw it even lead into Monday. Market was down nearly 26 cents at one point early Monday morning, but since then it closed about 9 cents down, only 9 cents down, which gives us somewhat maybe of a hope we might be at the bottom of the soybean market with the way we saw the sporadic trading get so large on that Monday, but then close only at 9 cents under. But still going forward, we're still looking at big supplies. We're having demand issues on soybeans. The export side of the equation is tough. I mean, we're way off where we have been the last few years on soybean exports. So going into harvest, things still just aren't adding up well for the soybean market.
Fair enough. And we all know that when one grain goes, other grains tend to follow. So how's corn looking in that same respect?
We saw corn down a little bit too on that Friday that we saw the bloodbath in soybeans, but corn's still just kind of trading sideways over the last couple of weeks in that 390 to 405 region. We're still looking at a large corn crop this year. So as we go into harvest, we got a large crop coming. The export side, demand side of corn, there are some bright spots. But we got a lot of crop coming in this year. It's going to be hard to see any type of market rallies before harvest, before we get into kind of that post-harvest period and let demand take over.
Last week, we spoke to a farmer who said essentially a lot of the soybeans were planted late this year because of a really wet spring.
Yeah.
And same thing with corn. And so as a result, a lot of corn fields and soybean fields got flooded early on in the season. There's a lot of preventative planning going on right now. So I'm sure you're well aware of all of that. Are there any changes that have been made, or are things still status quo on that?
Yeah, so it was kind of a late crop getting planted. We are starting to see some corn harvest in the state, especially further south in Mississippi. So a wet spring, how does that impact yield? The crop really doesn't show up till harvest. You can't really drive by a field and see that, oh, that was late planted or it was wet planted, like you can see a drought situation. So as we start kind of seeing some yields come in, we'll get a better idea of what impact that might have had on the crop. We do start getting some prevented planting numbers next month. FSA will start releasing some reports showing us how much prevented planting was claimed by producers in Mississippi, and that'll give us a better idea of, what we can expect from an acreage standpoint in the state and nationally.
And that's it for a deeper look into the markets.